Oh, I didn't think I was going to make it. Good morning. How you doing? This is the 0DTE morning market analysis where we take a look at the market situation for our daily 0DTE out of the money butterfly trades. We're looking at volatility. We're looking at direction, which is going to be a source of my focus today. And we're also looking at market structure for that entry event. What that means is there's structure in the market. We're looking in the morning for, depending on what our directional bias is, an event where it goes with the prevailing trend, and either it will pull back in a uptrend or it will pull up to and then continue the downtrend. So that is going to be part of the focus today. We're going to talk about strategy development because, a lot of people say, well, where'd you come up with this strategy, Ernie? And how do you come up with the edge cases? And how do you develop more strategies? How do you find those edge cases? And that's a very definitive process that we use here, and that will be the focus today. But first, let's get to the morning market situation. And the big news this morning for energies that are coming into the market is the employment situation report. I talked about that at the beginning of the week, and now here's the culmination of that, the big report that's coming out in about a half hour or so. And of course, that is one of the top economic indicators of all the 50 or so economic indicators or economic reports that you see released on a periodic basis in the morning. And it's because it is one of the two prime directives of the FOMC, and that is maximum employment and price stability. So we'll see how that's working out this morning, and that will undoubtedly have some impact on the market, good, bad, or indifferent. We want to check that out. All right, so let's get to it. We need to go now to the charts. Oh, wrong chart. Go to Trading View. We talked about that one yesterday. And so the first thing we look at is the volatility regime that we're in, and we're currently in zombie land. Zombie land indicating that we're in extremely low volatility, and when there's low volatility, you have an acceleration of premium decay, which means there's higher gamma, less profit potential, and so therefore we reduce our risk to adjust to that landscape. And we do that by minimizing the width of our flies. Not minimizing, but going to a lower width is the better way to say it. And so we're looking at between 15 and 25 wide. But now, we don't know. Are we on the 15 side or the 25 side? It all depends on the fine-tuning because volatility is all relative. You have the big picture volatility, and then you have what's happening that morning. And what I had previously announced was that, hey, today is employment situation day, and so there's always extra volatility injected into the market, and so that will affect the cost or the debit of the big ass fly, which is allowing us to do that fine tuning. All right, so what we need to do now is take a look at the big ass fly and see what its debit is, so we can go along that price scale. And we can see that the big ass fly is below 20. Now you remember yesterday it was above 25, which prevented us from getting into a big ass fly trade in the morning. It also put us on the narrower end of the scale for butterfly widths. But now we're at 1925. That's significantly lower than the 25 cutoff for our big ass fly trade, edge case trade. And it also will tell us what end of the range to choose. So let's go back to Trading View, and we can see that a 19 is on this side of the scale. You see up here, the top part here? Here, I'll just draw a rectangle so you can see we're looking up here, right up there. And you can see a 19 on that scale. That debit scale is on the wide side of that range. So see Zombieland, 15 to 25 wide. So we're 20 to 25 wide. I always kind of go to the upper end because overall there is better risk there. And so we're going to be doing 20 to 25 wide. You pick your poison today. All right, so the next step is to take a look at the market direction. And I have a slightly different setup here today, but you'll see in the upper left-hand corner, because we're above the Hull moving average, the market direction or directional bias is bullish. That means that we're choosing a call fly, out of the money call fly. And what we're looking for is interaction with the market structure, which is determined by a volume profile. And you can see here, I don't have the all of the volume profile stuff laid out here today, but I want to say that one of the reasons for that is that we're approaching all-time highs. We're breaking out of this major volume node. There's just one more child node that is above us until we get into nosebleed territory. And so that is the expectation today, is that we'll break above this level of support right here, which is currently sitting at about 6111 on the E-mini S&P futures. On the SPX, that would be about 24 points lower. And that's what we're looking at today. We're looking to break through there. So I would be looking for a pullback to the top of this volume node, which is at about 6100. So that's going to be our support. And this will be our breakout area at 6111. All right, so now we know the direction. We know where our market event is likely to happen. All that's left to do now is talk about the focus. All right, so let me bring that online here. And I'll just bring up the big head first, and then we'll then we'll talk about the focus. So, strategies. How do you determine or come up with a strategy? Let me just say that this strategy that I have here is a culmination of more than 25 years of experience in the market. Excuse me. And it started way back in the dot-com era, when I was chief architect for Sun Microsystems Professional Services. And I was in charge of all of our tier 1 clients, which were predominantly in the financial sector or the insurance sector. And that was very convenient because I lived up in the Northeast, and that's where they mostly resided, either in Manhattan or in Connecticut or on the Eastern Seaboard. So I actually had an office in the World Trade Center, and I frequented Wall Street, because World Trade Center was right next to Wall Street. And I actually lived down there on Front Street for a while, and I spent a lot of time in the exchanges, because all of the major exchanges, the brokerages and the financial institutions, the big banks, the investment banks, they all had a presence right there, and we were their primary supplier of technology and services. And I was in charge of overseeing those. So you get the picture. And so I got the opportunity quite often to hang out in the exchange floors. And there was one morning when I was on the American Exchange, and I was with a friend, and we were building some systems for them. We were looking at some of the new technology they had for order entry. And they were trading out of the money butterflies. And this is the origin of it, but this isn't really the total topic. I just wanted to give you the backstory. And they were using something called the 10% debit rule. And I thought that was very interesting. And that's where the origins of this strategy came from. I have since then developed it over a long period of time. After leaving Sun, I became a institutional trader and started up a hedge fund. And that's where I started getting into my professional experience in trading. But I brought that strategy along with me and developed it until I saw that institutions were starting to get very heavy into the 0DTE event, and plus they started to add multiple weekly options onto the indexes, and it became very interesting, and that's how it all started. And I've been developing the strategy ever since. But when I was a professional trader, I was also quantitative, so I was developing strategies all the time. And there was a very definitive process that we would go through. And that's what I just want to let you in on, that process is is quite involved. It usually takes a little while before we can come up with a strategy that has efficacy and can perform over a long period of time. And often we're looking at multiple strategies at any one time. And this is something that we teach in our coaching service too, that whenever we're looking for a new variation of our strategy, which we call edge cases, the main strategy is still alive since way back then not when I discovered it, when I was introduced to it more than 25 years ago. And that is the out-of-the-money butterfly, and traded on the 0DT event. Since then, I had developed literally thousands of strategies. And when you're maintaining a library of that many strategies, they have to go through a process to figure out whether or not they're going to go to your deployment. And so that's what I want to show you. So let's just take a quick, well, that's not what I want to show you right there. This is what I wanted to show you. So this is a high-level view of what the strategy's life cycle looks like, where you come up with the idea. That's what this head is. You put it into development, you try it out, you put it into simulation mode, you do different things. And once you've developed that idea, either you scrap it or you put it into what's called the curation cycle. And that's where we have a number of different strategies that are all running that we have developed. And we're trying to figure out how they fit into our overall live campaign. And so that's what the live campaign is over here. Those are the strategies that have made it through, and they've shown that they can work with all the other strategies that we're working with, etc. Do they have proper correlation, diversity, and meet our strict standards, etc.? And if they do, then they go into the live campaign. And most strategies will peter out after a while. Even after months or even years of curation. And if they do, then they go up here, we make a decision. Do they go back into curation? Maybe they need to be reassigned to a different category or usefulness within the team of strategies that we're using in deployment. Or do we just retire that strategy and put it into the bit bucket? Well, the bit bucket is over here. Over here, we just, retire it, I guess. Rest in peace, strategy. So once we've done that, each one of these cycles has a quite complex strategy cycle in of itself. I mean, this is the development cycle. Each one of these different things that we're doing here in effect could be somebody's full-time job. And then we have the curation cycle where we're trying to figure out whether or not it goes to the live show. And then we have our deployment cycle, the campaign. All right. So I just wanted to show you that so that you understand the rigor that we go through when we're developing these strategies and their efficacy, as well as the edge case strategies that we choose. We don't just say, hey, we got a great idea, let's trade this. That would be dumb, right? And so everything that we do is calculated and tested and retested and looked at in correlation with all the other strategies. Does it fit? Is it a good family of strategies to trade together? What kind of conditions do they work in, etc.? So that's what we do. And right now, we have a couple of different strategies that we're looking at curating. One we're calling the mother of all flies. We haven't actually started. That's more in development stage. We haven't started to curate it yet. And I had another brilliant idea, and that was how we determine price direction, because the standard way that I've been determining price direction for years, and it's worked out very well for me, is by taking a directional bias prior to the market opening. And got to thinking that maybe there's some good ideas that we could use to determine market bias after the market open. So that's what we're going to look at. And I developed an indicator. And let me bring that on here. And it's not widely available yet, but it's this indicator down here that I call the opening score. And what it will do is it will look at the first the morning session and look at a confluence of different factors that include various type of price action, momentum, volatility, volume flow, etc., order flow, and other factors, and they're all weighted. And from that, we develop a score. It's a binary thing. It's either up or down. And so I'm looking at its predictive capability in the first, the first hour or so of the market, so that we can determine what is the best course of action, and then weigh that against our traditional way of measuring directional bias. Right? So that's going to be under scrutiny and put into the strategy life cycle campaign. So I just wanted to give you a little bit of insight on what we do here in our coaching service, and also what you'll also be exposed to in the Zero DT Academy. And so if you're interested in that, go down below and you'll see the link for the Zero DT Academy. Join. It's a monthly subscription. And then from there, you get a taste for what is to be if you wanted to ascend to the coaching service. All right, that's about it for today. Thank you very much. It's the weekend, and big stuff's going to happen in about 18 minutes. I hope you all have a great trading day and a fantastic weekend. Make it a great one. Coach Ernie out.